Okay, this is Coach T from TackleTrading.com. Back to our video vault. This is our Options 101 series, and this edition is on risk graphs and the basics of how they work, how they're set up, and how a trader would use them. If you don't know what a risk graph is, basically it's a picture, and let me find an option trade that I'm in. Let's take a real basic one like a single DBA. We got call options on. So it's a picture of what is happening with the company that you're looking at, or if you're trading. And you can use risk graphs before you get into a trade by simulating the position, or you can use a risk graph after you've been in a trade by looking at it after the fact. Now, when an option is about to expire, you're going to just see a red line. Okay, and this one only has like 3 days left until expiration, and you'll notice the red line is the at expiration line. Let me grab a different one actually that's not July, August. Okay, this August Home Depot call option. Okay, let's look at Home Depot. So when you're in a trade, it's going to show you a couple of things, and let me reset the graph. Yep, there we are. And take the stock out of it so we're not confusing anybody. On the left side, you're going to see the y-axis. Now you'll notice plus 500, plus 1,000, 0, minus 500, minus 1,000. That is the scale of how much money we can make or lose on the position. Okay. The x-axis is at the bottom, and that is the price of the stock. So essentially what you do is you can connect the dots. You know, if I want to know how much money I'm going to make or lose at $125, I can come here to $125, come up here where the picture is, and it shows me about $800 profit potential on that trade. You'll notice a few basics. Okay, this horizontal dotted line through the middle, that's your break-even point. That's your demarcation line between profit and loss. That's a 0 right there. Anything above that, I'll make money. Anything below that, I'll lose money. You'll also notice some vertical red dotted lines. Those are corresponding to price slices. Now the defaults are just plus 10%, minus 10% for no other reason than that's just what they defaulted. So if I want to know something specific, I can type it in. Like for example, how much do I lose if it goes down to 113? Okay, it will move my line to that location, and it will show me what my loss will be at that location. I can also say, okay, what do I make if it moves up to 120? It'll move a line to that location, and it will show me what my gain will be at that location. I also can see that number up here on the graph. Risk graphs are very helpful in terms of planning a trade. Okay, so if I know I only want to lose maybe like $300 on the trade, I can come down here, watch the white line until I get to about 300, come down here and realize that's at about $111. Okay, whatever the number is, whatever your plan is, would be dependent on what you're doing. Y-axis, profit and loss. X-axis, price, stock price. Now, a couple of things about the risk graph. Number one is sometimes it will look like you can't see the entire picture. That just means the scale is off. So if I grab one of these numbers on the left and left click on it and drag it, it will move my risk graph to reposition the graph to show me where the profits and losses are. Same thing if I want to just recenter it, I grab the middle and move it left and right, and it will do that as well. Now, different trades will show you different situations. So if I come over here and find just a stock position on what we just did, Home Depot, why don't we do LUV? I can look at the Analyze tab and put in LUV, or locate it here and automatically load it in, and it will show just a 45-degree angle. See, when you're trading stock, there is no red line because there is no expiration. The red line is the at expiration. It's just going to show you the white line, which represents today. Things like covered calls. I have a covered call on PZZA. Okay, I can look at the risk graph PZZA and load it up. Now you'll notice down here it shows a theoretical position as well as the position I've traded. If I don't want it to measure both, I either have to delete that or decheck the theoretical position. Anything that's checked down here in the positions and simulated trades feature is going to be loaded up on the risk graph. So I'm going to delete that one, make sure I'm only measuring what I'm actually in, and it will show me where my maximum profit is up here at the top. You'll notice this number in red, watch it change wherever I move my mouse. So if I'm reading that in the left while I'm holding my mouse on the right, it's going to show that I can make $876 at expiration. See, there's a difference between profit and loss in options depending on when you do it. You'll notice the date. Today, 7/15, at expiration 8/22, shows me the different locations. Risk graphs are very helpful tools in plotting out your trades. You can also simulate a trade that you're not in. Let's take like a stock like Netflix, who just is reporting earnings. And let's say I want to take this one out. So I have no position, okay? I can come up here and simulate a position. So what do I do? What is it going to look like if I buy a call option? So I right click and I buy a single and then go back to the risk profile. You'll see the buttons up here allow you to move back and forth, and it will show you where your profit and loss potential is if you buy a single and how it looks. A lot of different features. One thing that you may want to remember is how to reset it. This menu button up here to reset the graph in case it ever looks kind of funny. Down here you can reset the slices or set the slices to different locations on your chart. For example, if I want to know where, let's say I want to take an iron condor on the RUT. Here we are, 1 day left. If I go to my risk graph, put in RUT, and set my slices to break even tomorrow or Friday, so I know where it needs to stay between. It tells me 13.11 and 11.28. And then if I set my slices to break even, or to the charts I should say, it will send those red lines to the chart. So now I know it just needs to stay between these two red lines over the next 2 days for me to make money. Okay, that has been a basic video on risk graphs. Dive in, play around with it, work with the slices, get a feel for what the red and white lines mean. One of the basic things is just learning how to read your profit potential at different prices, and also to simulate trades before you get in so you can look at the picture before you trade. Okay, this has been another video in our Options 101 series from TackledTrading.com. Get in the game.
Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.